I think that the big fight going on at the moment is Donald Trump versus Janet Yellen. And as long as the stock market is doing so right, I think the Yellen really wants to hike interest rates.
Hello, everyone, and welcome in to CrushTheStreet.com. I'm Kenneth Amaduri, and politics are all over the news. And my next guest is going to be sharing with us really how this political chaos is going to trickle down into our markets. His name is Ronald Stöferle, author of the popular and comprehensive report In Gold We Trust. And he's also written a book, Austrian School for Investors, Austrian Investing for Inflation and Deflation. He's the managing partner and fund manager of the Incrementum Fund. And this is a man, Ronnie is a man who's an encyclopedia of knowledge when it comes to precious metals and the economy. So it's a pleasure to have you on today, Ronnie. Thanks for coming on.
Hi, Kenneth. Thanks for having me. It's a great pleasure.
Well, let's start here. On page 36 of the report, you talk about gold. You're talking about it throughout. But, right now we're pushing the tail end of the business cycle, and recessions. A recession is due for our economy. And I want to get your thoughts here on the details on how gold responds during recessions.
Yeah, sure. I think it's a very, very, I would say, contrarian call at the moment, because everybody is so upbeat about the economy, about Donald Trump and so on. From my point of view, market participants should be rather fearful and not greedy, because I think there's quite a lot of signs that we will sooner or later enter recession. So I recently noted in a research paper that I wrote that since 1910, the U.S. economy is either in recession or enters a recession within 12 months in every single instance at the end of a two-term presidency like we had. So it's affecting 100% chance of recession for the new president. So from my point of view, this of course is only one factor, but we are seeing quite a number of different other factors. First of all, before every recession, we usually had rising inflation rates. That's exactly what we're seeing at the moment. Yesterday's inflation number, big surprise. Inflation is really becoming a big topic. In fact, we're talking about stagflation at the moment. Second thing is, the Fed we all know that the Fed is massively behind the curve, and the Fed will hike rates. I think they will continue to talk very hawkish, but act more dovish. But I think that there will be at least one or two rate hikes this year. And from my point of view, we're already within this cycle, this very, very long cycle, we're already on the way down. So I think that something that the market is completely missing at the moment and not discounting at all, recession is a scenario that is pretty likely, I would say. Now, the big question for investors is how does gold perform in a recession? And we crunched the numbers in our last report, and we basically found out that actually gold does pretty well during recessions. So on average, in every recession since 1973, gold was up 20%. And the reason for that is, from my point of view, that in every recession, as soon as the bad R word comes up, central bankers and politicians get nervous, and they're implementing fiscal and monetary stimulus. And gold is discounting those interventions, this stimulus, and this is a positive environment for gold. So I think as a gold investor or a gold saver, you should not be fearful of a recession.
Also in your report, you clearly show how the Fed's balance sheet correlates directly with asset price inflation. And of course, we know that some 95% of new wealth that has been created since 2009 has gone to the top 1%. Exactly the people who own these assets, really. You know, the people that are wealthy, they own the assets, and they're the ones largely benefiting from the Fed's expansionary policy. But what do you expect to happen here going forward? You know, talking about Trump, talking about, global politics, to the Fed's balance sheet?
Well, that's we could probably write a book about this question. There's so many different aspects of that. First of all, I think that Donald Trump, he's not the savior. And you just can't treat a disease just by changing the doctor. It won't happen. Of course, I often said he's either going to be the best or the worst president for decades. And I think that he actually delivered big time in the last couple of weeks, and I think the market is really appreciating that. I think that it's no coincidence that the market is trading at all-time highs. So the market is pretty much discounting all those changes in tax laws, all this stimulus packages, less regulation, and so on, all positive things. But I think that the big fight going on at the moment is Donald Trump versus Janet Yellen. And as long as the stock market is doing so right, I think the Yellen really wants to hike interest rates. I think that Trump will continue to put pressure on the Fed. We should not forget that he's really the first president in ages that talks about the dollar and the exchange value of the dollar. He often said that the dollar is way too strong and that it hurts U.S. exports. So I think with Donald Trump, we will enter a totally new episode of currency wars. And basically everybody wants to weaken the exchange value of its currency. Not only the Americans, but also the Europeans, of course, and the Japanese and the Chinese. So at the end, who's going to win? It's probably going to be gold, because gold is not participating in those currency wars. Talking about the Fed, I think, they're basically the whole world is doing quantitative easing. The Bank of England, we've got the Bank of Japan, we've got the European Central Bank, we've got the Swiss National Bank, and the Federal Reserve is doing nothing at the moment. And this is also one of the main reasons for the strength in the dollar. Sooner or later, they will have to implement another round of quantitative easing, or whatever they're gonna call it. It's just a one-way street, and all central bankers painted themselves into a corner, and there's basically no good way out of that.
Yeah, the common theme, the common word that we've been using here at Crush the Street is the breaking point, and it really does feel like we're at that breaking point. And, when it comes to the central banks, it's all about perception, really controlling perception. And I find it interesting that they are talking about raising rates, and also backing away from QE, supposedly. But really, they could start doing things that other central banks are doing, like buying the U.S. stock market to a large degree. And many are saying that they already do that, covertly, but maybe coming out in the open and making it common knowledge that, hey, we buy stocks and we're going to go in and juice this economy even more while, let's say, raising interest rates to show some sort of fiscal restraint on one side, but then, monetary stimulus on the other. And honestly, I don't see what's stopping them from going in and going into the real estate market and starting to buy houses for 2 or 3 times their fair value. I mean, really, there's a lot of options for them to continue to mess with people's perception, per se, and attempt to keep this thing going.
Yeah, I totally agree. I mean, we're seeing. I would call the what's happening in Japan. We call it the Japanese endgame, because they are really a few steps ahead. I think they're running quantitative easing part 12, but they are calling it QQE, so it's quantitative and qualitative easing. But why do they do round number 12? I mean, that should mean that it just doesn't work. Of course, their interpretation is that they haven't done enough, so they're fixing the price levels or the yields for the 10 years now. They're buying real estate, they're buying stocks. Of course, there will be effects, and those effects will probably be on the currency, and we're already seeing a very weak yen. I think this will continue. So of course, Japanese are already a few steps ahead, and they show that for some reason people still haven't really lost trust in the Japanese system. However, it's basically impossible to anticipate this breaking point or this tipping point. And what you said before, of course, central banks are causing asset price inflation. And from the Austrian point of view, Murray Rothbard, for example, said inflation is always a monetary phenomenon, like Friedman always also said. So first of all, there's monetary inflation. Central banks and commercial banks propping up the monetary aggregates. Then there's asset price inflation as a second stage. Real estate prices, art, stocks, bonds, and so on rising in prices. And the third stage is price inflation. This inflation that statistics try to measure with all those baskets, and we know that it doesn't really, that it's highly subjective and so on. But this is the last stage of this inflation process. Now, inflation always acts like a tax, basically. The Austrian School of Economics is often referring to the so-called Cantillon effect. You probably heard of that. This means that the newly created money is not simultaneously distributed among the population. Some users benefit from rising prices, while others are harmed from rising prices. So money supply expansion is always a transfer of wealth. Market participants who receive the newly created purchasing power earlier, they benefit relative to those who receive newly created money only later or not at all. And Hayek compared the Cantillon effect, for example, to pouring honey onto a saucer. The honey only distributes itself from the center outward. Transposed to the effects of inflation, this means that governments and companies that are really close to the source of money creation, they benefit from it, while they received because they received the new money before prices in the economy have already risen. And this is also one of the reasons why, for example, in financial centers like New York, like Hong Kong, like London and so on, the prices are rocketing higher, and they're at ridiculous levels, because there are mostly people who profit from monetary inflation, from quantitative easing, and so on. And I think this also has a political consequences. I think it's no coincidence that in the US, but also in the UK and over here in Europe, there's a huge gap between people living in urban areas like, I don't know, New York, London, and so on, and people from the countryside. People in the urban areas, they tend to vote for the status quo. They voted for Hillary Clinton. They voted against the Brexit, while people on the countryside who suffer from monetary inflation, they vote for Donald Trump or they vote for Brexit because they can feel that their purchasing power of their hard-earned money is getting weaker and weaker. So I think monetary inflation has huge consequences for our society. And therefore, I really, we often said in interviews at the presentations, we're pretty certain that Donald Trump will win the elections, and that going forward, the zeitgeist will be that people will continue to vote against the status quo because, as Clinton said, it's the economy, stupid, and there's quite a lot of people who actually are not doing really well. And from our point of view, central bank policy is quite important.
Wow.
Regarding that.
Yeah, people tend to vote with their wallet, whether that's for more government handouts or for what they feel is best for the economy as a whole and what they think will be best for themselves in the future for their children. The populism is certainly on the rise, and we've seen that here with Donald Trump. You brought it up. Brexit, and even in France now, we have Marine Le Pen, who's got a good chance of winning for the National Front Party. Is this giving you hope that there's, as an Austrian economist, that there is some sort of hope or some sort of reset that we can implement in the system? Or again, is this just changing the doctor for the same disease?
Well, Ludwig von Mises would have said at the end they're all a bunch of socialists. So I don't know too many politicians who really promote some sort of a laissez-faire approach and a small government. At least over here in Europe, there's none. In the US, of course, you had Ron Paul, who I really admire. I think when it comes to France, I'm pretty certain that Marine Le Pen doesn't have a chance in winning the elections due to the system in France. But I think in the Netherlands, but also in Germany, it will be really interesting. In Germany, for example, you've got the socialist candidate, Mr. Schulz, who seems to be becoming more and more popular. So Angela Merkel is kind of becoming nervous. So I think that, with so many crucial elections in France, in the Netherlands, and in Germany coming up in Europe, this will, for the markets, be a very, very political year. And I also think that there will be enormous pressure on the European Central Bank, because also here inflation numbers are getting stronger and stronger, while Mr. Draghi continues to print money like crazy. So I think sooner or later there will be so much pressure, especially from the Germans, that the European Central Bank will have to reverse, and therefore we're I would say for a midterm call, we would be slightly bullish on the euro.
Ronnie, now that we're kind of into this interview here, I want to ask you, is there anything else that you feel like our audience should know or you want to leave us with before we close it out here? Anything else that you had on your mind that you'd like to share?
Well, I think we're living in very interesting times, especially for investors. I think one really should study the Austrian School of Economics. They're very, very controversial, totally different views than monetarists and Keynesians that are ruling academia and politics at the moment. And I think the Austrian school not only gives you good answers, but also asks the right questions. And the Austrian school was brought up in a time when hyperinflation, wars, political upheaval, and so on were quite common. So that they don't care if the GDP will rise 2.4 or 2.5%. They really try to understand the big picture. And I think this is crucial going forward, really understanding what's going on, the interplay between inflation and deflation that we're often explaining. We call it monetary tectonics. So if there would be a laissez-faire approach, the crisis would be highly deflationary, but central bankers and politicians want to push against that and implement very inflationary politics. And this is a very, very fragile world when it comes to finance and investment markets. So I think that really one of the best investments is in education and reading books from Austrian economists. We wrote a book called Austrian School for Investors. It was nominated for the German literature prize. We brought up the English translation last year, and it's already really successful. So I really hope that your listeners are interested in the Austrian school, because it really offers you a totally different view on markets and the world in general.
Well, great advice right there, Ronnie Stöferle. Ronnie, thanks again for coming on the show with me and sharing your knowledge and wisdom.
Thank you very much, Kenneth. It's been a pleasure. All the best.